After losing 130K, I wasn't confident enough that it won't happen again. It took Apple 35 years to hit $1 trillion and then a year to hit 3.
You can make free dividend income and then write it off. Traveling is so bad. Well, welcome back, ladies and gentlemen. Today I got the pleasure of the Canadian Finance Pro joining us, Bassem here, who is an expert in a wild amount of industries related to finance, whether it's real estate. He's into CPA work, which is one of my most fascinating places to play around in right now for those that are frugal, trying to start businesses, corporate investing. I mean, you do a lot. You're a multi-millionaire. I mean, first and foremost, welcome.
Thank you. I hate the term multi-millionaire. I don't know. It just sounds weird. I don't want to sound like I'm gloating or anything, but thanks for the intro. I'll take it.
But I want to dive into this a little bit. I wouldn't mind getting a bit of your background, like maybe just kind of tell us how you started up and maybe give us the diversity of the businesses you run, because you're one of those highly impressive people that just kind of got into a multitude of industries.
So I've been an accountant for 15 years. I'm a CA. I call myself a chartered accountant, even though they've recently changed it to CPA. I'm bitter. I did it the hard way, so I still call myself a CA. They changed the name a few years ago, and I don't like it. But I got my real estate license at the same time, mainly to buy my own rental. So I had a realtor. I didn't like him. I fired him. I got my license. It took 3 months to get my license, which is pretty sad. I got my license and I bought my own rental. And then people at work saw that I had a working rental and they knew me. They knew like I knew taxes and cash flows and stuff. So they used me to buy their rentals as well. So that's how it grew by accident. I kind of wanted to get my license to buy my own rental and then maybe dump it. But then I just kept growing it. And now 15 years later, when I started the YouTube channel in 2020, I started getting more, I guess, people wanting to buy or people reaching out because of that. So I ended up hiring 3 part-time staff, like 3 new realtors to help me because I was doing too much. And then on top of that, while doing everything, I was doing options trading. As part of your accounting degree, you learn a lot of finance and you learn options as well. My professor, his name was Semi, he would show us his retirement portfolio and he would kind of trade in class, which I don't think he should have done because he was trying to teach us, but he was trading and he was just showing us how much he would make. So I started to do what he was doing. He would buy like TD Bank and just sell a covered call. So TD would pay a 4% dividend a year. And then he was able to make another 4% just off selling covered calls. So he was able to get 8% a year, which is pretty good. I started that. And then I think 8 years later, from 2011 to 2019, that's when I went into full-time options. I don't really like owning stocks. I feel like I can make more trading options. And then a few years later, here we are. I did a portfolio reveal a few days ago now. I don't know when you're releasing this, but I hit 2.2 million in Canadian dollars, partly because the US dollar went up like 20% this year. So it's not all my gain. It's just buying and holding. But it's, 2 million over 15 years of investing. I'm pretty proud of it.
Yeah, no, it's kind of incredible because options are, I mean, you've probably had a few YOLO trades, I'm sure. Do you get a lot of degeneracy in your options trading, or are you just kind of writing covered calls, puts?
I do, because I feel like to make a lot of money, which is what I was trying to do, there are some YOLO trades. I made a huge blunder, which kind of humbled me. So in 2022, I lost like 130,000 US. I went to a wedding in Mexico and I had an open trade and I wasn't monitoring the trade when I was at the wedding, and something happened. Earnings went up. Nancy Pelosi did me wrong. I lost 130,000 in 3 days. And I was like going to start crying. It was the worst I've ever felt because it almost eliminated, because I made 118,000 options trading in a year and I lost it all in 3 days. All because I just
away, man. You got to be careful.
It was the worst I've ever felt. I don't know. It was just so, because like here I am I think I made 106 videos of me trading, and then the 107th was me losing 130,000. Yeah. So it was hard. It was kind of hard to stomach, but I don't do those YOLO trades anymore. And now I just do some kind of small time trades.
So do you have like a long-term portfolio then? Like, are you more fixated on the real estate side of your portfolio, or are you buying individual stocks?
So everything changed in 2022 or 2023 when the stock market kept going up. I was losing on 90% of my trades. I wasn't sure what to do. Like if you sell a covered call, if the stock goes up too much, you miss out on the gains, and also you lose the shares because you have to cover this call option that someone is buying off of you. So because the market was going up so much, I didn't know what to do. I ended up buying and just holding shares for the last 15 months, which is not what I wanted to do. I wanted to be a full-time options trader, which is kind of like my dream, I guess. But I'm not confident enough in my portfolio. And obviously after losing 130K, I wasn't confident enough that it won't happen again. So I did a 97% chance of success trade. And then that 3% chance of loss hit. And it wiped out a year's worth of income. So I kind of lost my confidence in being able to live off of it. So that's why I'm just buying and holding now. And it's mainly, I'll say I have 50% in the S&P 500, so the overall market. Yeah. And then 20% is just purely Apple. And that's because I've had it for like 12 or 13 years.
Yeah, and you kind of advocate toward that long-term buy and hold strategy, as we were kind of discussing on your channel. But I wouldn't mind getting your perspective too, with Trump kind of getting in here. A lot of concern over valuation on a lot of the S&P top 10. You think we're going higher, lower? What do you think the next 1 or 2 years look like now that Trump's in?
So I do think we're going lower. We had 2 years of like 25% and 26% gains on the market. It's too bubbly. I think we need a little bit of a correction. The bigger it goes, like the more it'll crash. I think every 10 years we're due for a correction, right? And it's not guaranteed that it'll happen. The last one was in 2020. So what are we, like 4 or 5 years away from another one? If I would just feel better if I don't see my portfolio go down 30, 40%, even though I'm not selling and I don't need it now. If we just kind of hover or go down a little bit, the valuations don't make sense. Apple is at 4 trillion. And then you mentioned that like Google makes more than Apple. So why is it worth 4 trillion? Even though it's not. I made a video, I think like 5 years ago when Apple hit 1 trillion. So it took Apple 35 years to hit 1 trillion and then a year to hit 3 and then another like 6 months to hit 4. So I don't mind if it goes down a little. I would feel better because
that's what everyone's saying. Like just a bit of a correction, let valuations catch up a bit. And we'd all be sleeping easier at night because like you buy and hold, but we're young. We kind of have to ride the volatility because you never know when it's going to drop, but you have to be willing to accept a 40%. I think that was the biggest drop the S&P had at any one time was a 40% correction, but it can happen. Black swan, you never know, right? And I wouldn't mind pivoting a little bit just to kind of get a little bit more intriguing into your world, because as much as we're talking about stocks, you're very fixated in the US and you talk a lot about buying US real estate. And from the Canadian perspective, because Canada, where we live in Toronto, is not exactly landlord friendly, but what's your fixation with expanding into the US? Do you see it as a tax advantage place, or like how is a Canadian looking at investing down there from your perspective and what you're doing?
I feel like I loved Toronto and Canada up until 2020 when everything kind of got worse. I don't know, just everything just got a little more expensive. I don't like my tax bracket. I don't like how expensive everything is. So if I go into Texas, my taxes will reduce 20%, which is like 80 or 100 grand a year just by moving and buying same income, same everything. It's just like my tax bill goes down and I feel like I'm not getting any benefit for the more I'm paying. So right now I pay 53% tax. So every dollar I earn, I make less than 50%. Yeah. So if I earn $1, I'll keep 47 cents of it. Yeah. And it just kind of hurts. It kind of hurts to see, especially because we pay 13% tax on HST. Yeah. And then I have my property tax went up 9.5% last year and it's going up 6.5% this year. Yeah. So I feel like 70% of my income, if I look at it, is going to tax. And then we also have land transfer tax. When you go to buy, we have double land transfer tax in Toronto. So if you spent $750 on your condo in downtown, the land transfer tax would be $23,000 and you never get that back. Okay. Yeah. You'll get some of it back. You'll get some of it back, but my clients, some of their houses are like Yonge and Eglinton, they're $2 million and they're paying $80,000 in land transfer tax that they don't get back. And now their property tax in 2 years up 16%. Yeah. So it's hard to see.
So how does that work then? Because you're not a US citizen, right? So are you dealing with the withholding tax? Like, kind of break down the technicalities of that.
So it's a little different because I was born there.
Oh, yeah. So you have citizenship.
Yeah.
Oh, okay. So it gets a little easier.
Yeah. So I was born there, but I came here when I was 1 or 2. So like I never considered myself American or anything. I never filed taxes there. But over the last few years, just looking into it, so a condo is like a third of the price. Like I was looking at Texas mainly because I wanted somewhere warmer. Maybe I could get a gun just for fun.
You can get a gun here.
Can you?
Yeah, you didn't know that. We have. My dad wants me to get my license because he has a ton of guns. I always used to. My buddy used to joke because it was the way. Anytime I was like on a date, I'd always bring them to the farm because most people have never shot a gun before.
Oh.
So I didn't realize. Take people shooting all the time.
I thought you had to keep it locked in a safe. Like that's
you do, but if there's variations on it. Like if you live on a farm, you can leave your gun out just as long as the ammo's not next to it. Like I think people in the U.S. are usually shocked when I tell them like what the gun laws actually are here. Like anyone can get a gun. You just get a license. It's like a 2 or 3 day course.
I've done zero research on it.
Yeah, it's like the problem now is people are getting pissed because they're taking away restricted. Because now that you have to get grandfathered into restricted. So if you have a handgun, you can keep it and you can grandfather it to someone, I guess, but you can't go out and get a handgun anymore here.
Okay, wait, but you can get a rifle then?
Yeah,
If
you
not
can
a
rifle, all kinds, shotgun rifles. I mean, yeah, my dad's got a ton of guns. You
Okay.
grew up with them. I mean,
All right, I didn't realize.
because they come up north. My parents don't have the farm anymore, but my dad still goes hunting.
Okay, let's do it.
Yeah, for sure. So anyway, so you're a U.S. citizen. So you're just so you have the freedom of mobility. You can just go down and do what you want. Because my friend's parents own homes down there, but they had family down there, so they opened up an account in their name, so they wouldn't have to bring the U.S. dollars back over the border and pay the withholding.
Yeah, so I am planning on keeping everything there because like if I keep my accounting job here, the income I earn in the U.S. I don't need to repatriate. I could just kind of keep it there, and I like the stability of the U.S. dollar. Just considering our Canadian dollar has tanked like 20% in just like 18 months, so the purchasing power and everything and the freedom. I think over the long term, I might just want to be a snowbird. So just go there for the summer. I mean, just go there for our winter and it's a little nicer there. But it depends if I decide to retire. I'm not sure if I'm the retired type because I just like being busy. If I'm healthy, I'll go to the US. If I'm not healthy, I think I'll just stay in Canada for the healthcare.
Yeah, that's good. Yeah, the U.S. real estate thing is just interesting, but I wouldn't mind talking to you about the dollar side of things because I notice a lot of people kind of giving up on the dollar aspect of it. There's a lot of stuff I want to talk to you about because you're CPA, but we'll start with the dollar because I wouldn't mind getting your perspective on this. Most people have no idea how currencies work, just like stocks, global trade, whatever. But the disconnect that's going on right now for those that are unaware is that most countries are on the brink of recession, so they've been cutting interest rates, and that really screws up fixed assets for people that live in those countries. So they have money and they're like, I can't put it in my bank anymore and get 3%, but I can go put it in a US Treasury or whatever and get 4 to 5%. Plus their dollar's stronger, my dollar's getting weaker. So there's this kind of like crazy inflow, and the United States dollar is at like a 25 year. It hasn't been this high since the .com bubble. And I'm sitting here just kind of perplexed on what happens if the US starts to cut rates more aggressively and it gets more in parity with the rest of the world, or if the Fed's doing something a little bit more maniacal and they just don't mention it, that they want to leave rates higher because they understand that it's kind of a deflationary effect for them, because global trade for them, though commodities are going up, they can buy it at a huge discount because everyone's currency is collapsing right now. I wouldn't mind kind of getting your perspective on just that.
So it's a lot to get into because it's also like the government spending. So I think the Canadian side can be fixed if they don't do like a $50 billion deficit, which is what we're at. Yeah. So the government only earns revenue from our taxes. Our taxes can't cover, so they're spending more than what we send them. To make up for the $50 billion difference, they have to print more. On top of the inflation, and the interest rate, they're printing the $50 billion, so it further devalues. And
do you think the dollar comes back at some point?
I do, but I just want the stability of, I guess, the USD, because I didn't want to be 100% in Canada. And, in a few years, if I'm able to leave or move somewhere, I guess like tax-free, if I have a more stable currency like the US, I think just personally, I'll feel better. I don't know. Maybe I'm making a gamble that doesn't pay off.
I'm in the same boat as you, though. Like 80% of our assets have been in the U.S. dollar, always been in U.S. stocks, and it's done so favorably well for us. And I think Canada gets kind of biased that way, where they're kind of scared to convert, and now they're like really don't want to convert. But I'll still cost average into the U.S. regardless. But we're very fortunate that we made that decision pretty early on. But I wouldn't mind pivoting just a little bit here because I want to talk about what I consider the final boss of Canadian finance, which is, and you're talking about your tax bracket and all that stuff. I mean, do you not take advantage of like corporate investing, like you're saying, like write-offs? And I'm sure you're kind of in a situation like I am where you have some kind of employment income that puts you in that bracket, because I also have employment income that's put me in a higher bracket. So I try and keep as much in the corporation for my personal income as possible. And I don't think people appreciate the tax advantages you get, because I think if you make under $500,000, you're only taxed at like 13%. And if you have to pay HST though, so another 13% or whatever. But if you make US dollars as a Canadian selling products to the US, you don't pay any HST, and you're only paying like 13% or less under $500,000 of income. So a lot of people just open up multiple corporations when their income starts to scale. I've seen so much insanity at how people play the system. But I mean, how do you think Canadians can take advantage more of like the tax system here?
It all depends on your job, right? So if you're salaried, you're paying the most amount of tax, and there's nothing really that you could do. If you can start a corporation, any expense incurred to earn income other than clothing, unless it's like branded clothing,
Yeah.
then you can expense it. Like I know you wear a suit on your YouTube channel, but unless it specifically says like Canadian passive investor, like I don't think you can expense it. But any other trips, like if you want to go buy something in the real estate in the US, you can kind of write that off. If you have a real estate license and you have a car to drive around clients, you could also write that off. So if you have your own business, there's a lot to write off. I feel like the salaried people are subsidizing the whole country, subsidizing the rich as well. Like if you make, let's say if you have a net worth over $10 million and you're just living off dividends, you get tax credits, your dividends, your personal tax rate is lower than someone who makes less than you, even though you're worth, let's say 10 times. And even if you look at the capital gains, I don't know what's going to happen with the capital gains rate. They're supposed to increase it to 35%, but then it didn't get passed. And then now Trudeau's not in the government. It hasn't been passed yet. So is the new rate 35%, which I'll feel a little bit better on. So at least like the rich people get to pay their tax, but, or does it get repealed if it doesn't make it in time? I'm not sure, but there's so many things you could do. A lot of people don't know like tuition tax credits. A lot of my friends, when they go to university, there's like a T2202. It's like a little form you get credits, you get 15% back on what you paid. Yeah. And that could be, if you stayed on residence, it could be like $100,000 to help reduce your tax.
Yeah, because I think practically though, can't most people just, because I was mostly a sole proprietor for a long time, but so I've always been taking advantage of the tax code. And what people need to understand is corporations spend the money first and then pay tax on the remainder, right? I mean, can't anybody just go up, open a sole proprietor, say there's some TikToker, and I was banned, but and just post a few videos and just say I'm working at a loss and write off part of their property and take it out of their salaried income and get some of that tax money back?
Okay. I like it. So first of all, yes, but there is something called reasonable expectation of income. So a lot of people used to do this where they'd have a business with a loss for 10 years. But the CRA says, how can you have a business if you're losing for 10 years? So you're obviously doing some funny business. So I'm
not saying like fully take advantage and be a degenerate, but I am saying like you could do dog walking on the side. Like you could start any business that starts generating income.
You could start anything. And even if you want, you don't have to start a corporation. If you have it under your own name, you could, in the tax return, you could file something called a T2125, which is like a sole proprietorship. Yeah. And you can write off reasonable expenses spent to earn income. I think everyone should do it. Like I try to tell everyone to start a YouTube channel. Even like one of my friends, she just started DJing. Like she's starting to learn how to DJ, and I was like, just film your progress. Yeah. Like it might blow up. You might make more. You might be able to write off your DJ equipment. She's doing it as a hobby on top of her full-time job. Like just start a side business YouTube channel.
Yeah, that's the painful thing. Like you see people trying to do something and it's a hobby and they're spending all this money on it and they're just not taking advantage of the capability of, like you said, just start a YouTube channel, because then you say it's a business, right? Get some of that tax money back. But yeah, is there anything else you think CPA wise? Like, I mean, I feel like it's very finicky, and I wouldn't mind getting your idea too on the perspective of when you invest in a corporation, because that's been a bit of a tricky one for me to understand. And a lot of people ask me about it. How are capital gains versus dividends taxed? Because I see a lot of things like a Canadian corporation paying another corporation a dividend might just waive the tax. I mean, give me a little, I don't know how much you can go down that rabbit hole, but just talk about the tax liabilities on corporate investing.
So it's hard for me to give like the best advice, because I need the numbers and like the charts right in front of me, because they change every year and they get indexed. There's certain tax advantages. If you have a public corporation paying you dividends, you'll get eligible dividends, which gets a tax credit. If you go into like a Wealthsimple tax calculator under Ontario, and then if you put eligible dividends, type in $50,000 of income, and you'll see your tax is zero. Because of the tax credits, you'll go down to zero. But then if you have your own corporation, since you're not public, you'll get ineligible dividends. And then if you type in $30,000, it'll probably be tax-free. So there are certain tax credits to avoid double taxation, because you're taxing your corporation. And then if you withdraw it as like a dividend as an owner, you're taxed again. To avoid double taxation, there's some tax credits you get personally, and then you might be able to get $30,000 tax-free.
So that's what I was talking to my accountant about, because there's some, like, you know, when you pay it out, some of the gains and stuff you can waive. But that's the weird thing about it, because everybody sees like the headline, oh, corporations tax passive income at 50%.
Yeah, and it's not always the case. There's more nuance. And then like, I guess a more expensive CPA, if they could structure it properly before you open the corporation, you might be able to do it. But let's say if you have a house and you're like, hey, I just want to roll it into my, you know, if you have a rental, you bought it personally, you want to roll it into your condo, it might not always work. There are, because like you might have like a deemed disposition. I know there are some rules against that, but then the bank might not allow you, because if they hold the mortgage and they don't want to give it to the corporation because they already approved you to do it.
So in your expertise, just as a funny like anecdote, let's just say you own TELUS stock, whatever, you own VDY or Canadian dividend stock that mostly holds Canadian companies that make more than 50% of their income in Canada. So it's an eligible dividend tax credit that comes into your corporation. Can you then take that tax credit, spend it on a trip as a write-off? Is that possible?
Okay, yes. If you ever get audited, you just have to explain why it's kind of related.
Did you hear that, folks? You can make free dividend income and then write it off. Traveling, it's so bad.
I know it is bad. These are the tax loopholes that
That's what
like
I'm saying. Like
yeah.
I'm learning this stuff and I find it so confusing that everyone asks me, and I'm so like kind of nervous about talking about it because I'm like, I'm not paying a lot of tax on my corporate income, but I'm not exactly sure how to explain it because it's
That's
like
so funny. No, it's just the way the rules are. If you think about who makes the rules, they kind of make it for themselves.
yeah.
And there's obviously like lobbyists. It's not as bad in Canada as the US, but these rules are meant for like the high net worth individuals to kind of get away with
Yeah.
it. Like their effective tax rate's a lot lower. Did you know about just charging your corporation like car use? So it's an expense for your corporation. It's not income for you. So it's kind of like a double tax-free type of thing. If you
Break that out because I write some of my car expenses off.
So if you're driving, let's say 1,000 kilometers a month for your corporation, the CRA gives you a prescribed rate. So like, all right, you're using a car for your company and we'll give you 75 cents for every kilometer that you drove. So every month you can bill your company $750. So it's car usage personally. So it's not income. It's reimbursing something you spent. So it's not income on your side. And then you're billing your company. So it's an expense on their side.
Yeah.
So
The other fun thing too is that you can borrow against your corporation at an incredibly low interest rate. And this was something that I didn't do when I bought my property. The accountant said, look, like you've got some money here, you can pull it out. I think what's the minimum you have to pay though? 2%?
yeah, so you have to pay a small rate, but then how much, there is something called like over 2 years. If you have a shareholder loan outstanding, the CRA might call it income personally.
Yeah, that was the nefarious thing, right? Because they're like, you can take all the money out of your corporation, but you have to pay the corporation a 2% interest rate because now it's a loan, and you have to pay it back over what, like 10 years or something.
So here, what people do, I know this is devious. So you can't cross the second calendar year owing the company. So what you do the day before the calendar year ends, you pay it back. And then 2 days later, you just take it out again. So
Worse
you can,
than a wash sale.
yeah, I know. You can have a perpetual loan against your company. But also anything you put into the business, like if it costs you like 100K to start your business, you could pull the initial 100K out tax free. Like that won't be considered income.
So if somebody wants CPA work, are you open for business?
No.
Damn.
Stop asking me to do your taxes. No, so I think I'm not insured, and the insurance to be a corporation and just giving the tax advice, I think it's a little too high. And one thing, I think I'm doing too much. So I'm at a company right now in there running a finance team, and I do the real estate and the YouTube. I'd love to give people advice if they message, but I don't want to do the work. I think I'm too stretched.
Yeah.
Yeah.
So I will say though, it is a headache setting up a corporation like properly and getting a corporate account. I don't think I've ever signed so much paperwork in my life. And even the lady at the bank thought like, she's like, I've never met any individual that's opening up a corporate investment account just for themselves. Like,
Yeah, there's a lot of things people don't know about. It's why I started the YouTube channel. All my friends were asking me. So half my friends were realtors. They didn't go to school, became realtors. That's how I got into real estate.
you work for RioCan, man. Hashtag RioClan out there.
So by the time I graduated university, some of my friends had like 11 properties.
Oh, wow.
And they just kind of retired at 22, and they were just living off the rentals because they were able to buy when things were like 250, 300 in Richmond Hill. So they're doing fine now. But they just didn't know about potential tax savings. And instead of answering the same question 100 times, I just made YouTube videos about it. Like, here's what to do.
Yeah.
Yeah.
Well, on that note, I kind of guess we'll pull like a hot ones here. I appreciate you coming on, and maybe what we'll do is a Zoom deep dive down the road. I wouldn't mind kind of getting a little bit more in depth to with the taxes and maybe structuring it a bit better for the members that join my courses. But like on hot ones, there's camera. Tell them what you got going on in your life and where people can follow you.
So I quit social media because I was too distracted. I'm not on, I still have my accounts on like Twitter and Instagram, but I don't follow them anymore. Like I'd be at work just like scrolling like cat reels, and it was pretty bad. So I kind of quit everything, but follow me on YouTube. Just search Canadian Finance Pro. You can email me with any questions. I'm not going to do your taxes, but I'll help you if you have any questions.
Just tip them a bit, you know. But we'll leave all your links down in the description below. But awesome, man. I appreciate your time. Thanks.
Thank you very much.